Hello, welcome to the European Open briefing for Tuesday, November the 15th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So we have a bit of a pause in the dollar rally today. Yesterday we saw the dollar hit a 5-month high against the yen, breaking above 108 yen. The dollar index is holding near 11 months highs, and we're also seeing the sell-off in government bonds also easing down a bit. We had a couple of Fed speakers. Late yesterday, we had the Fed's Kaplan reiterating the need for a Fed rate hike soon, while Jeffrey Lacker said that if there is a fiscal stimulus in the US, that would strengthen the case further for Fed tightening. The euro, on the other hand, isn't doing too well. It hit the lowest since December 2015 yesterday, and it's both in part due to the stronger dollar, but also on political uncertainty in Europe from upcoming elections. And in other news, we have the Australian dollar not seeing much of a reaction to rather surprising RBA minutes, which were very clear in saying that further rate cuts are unlikely. So let's move on to the dollar. We can see here that yesterday it broke above 108 yen. It's currently holding just above that level. That was the highest since June. The dollar index hit 100.22. That's only slightly off from the December 2015 high 100.51. If it does break above 100.51, it would reach a 14-year high. We had a couple of Fed speakers pretty much reiterating what markets are anticipating. The Richmond Fed President Jeffrey Lacker said, speaking on the anticipation that Donald Trump will boost fiscal stimulus in the US, he said that such a scenario would strengthen the case for further rate hikes. Dallas Fed President said that even without any further stimulus, he said that based on current projections, a rate hike would be appropriate in the US. If we move on to the euro, we can see yesterday it touched that low point of 1.0706 versus the dollar. That was the low since December 2015. There is a bit of uncertainty what's happening in the Eurozone, mainly from French and German elections next year. But in the near term, we have a referendum in Italy on the changes to the constitution. Italy's Prime Minister Matteo Renzi said that he would resign if he lost the vote. Current polls indicate that the no campaign is slightly ahead of the yes vote. So that's creating a bit of a uncertainty for the euro, and that's mainly because the Italian Prime Minister is seen as pro-market. He's been able to get some reforms done in Italy. Italy's economy is struggling to grow, so if Italy's Prime Minister does resign, that would be negative for the Eurozone economy. Let's look at Asian currencies now. We can see here the Chinese yuan. We can see there in the past few days it's been hitting fresh lows versus the dollar. It hit an 8-year low today of 6.8640 per dollar. That's low since 2008. In the year to date, the falls aren't too dramatic. It's down around 5% so far against the US dollar, and that's mainly because People's Bank of China is intervening less in the market. It's letting the currency being driven more by market forces rather than by intervening. Although the market analysts currently they're not expecting the People's Bank of China to let the yuan fall too dramatically. So we're probably going to see continuation of steady falls rather than any big falls in the Chinese yuan. And finally, let's have a look at the Australian dollar, because we had some relatively hawkish RBA minutes of the November policy meeting. In the minutes, the RBA said that underlying inflation was expected to return to more normal levels over time, and that risks around the inflation forecast were broadly balanced. And that pretty much reduces the odds that there will be more cuts by the RBA, at least in the near term. but the reaction in the markets was rather muted. We saw the AUDUSD moving up only slightly. It's currently around 0.7550, and I guess another currency that's being weighed down by the stronger dollar, so there hasn't been much reaction to those surprisingly hawkish minutes from the Reserve Bank of Australia. Let's move on to crude oil now, because yesterday we saw crude oil prices hit a 3-month low. Crude oil is mainly been impacted again by a stronger dollar, because a stronger US dollar makes it more expensive for other currencies to buy crude oil, since crude oil is traded in dollars. Today we've got some reports saying that expectations or that US shale oil output will decline in December. That's helping prices go higher this morning. We also had some comments from Saudi Energy Minister. He said that it was imperative for OPEC members to reach an agreement on the proposed deal that they agreed on in September, although they haven't quite worked out the details. This appears to be ongoing arguments, disagreements as to how first of all, how much they will cut, and how that will be distributed. And we've got the meeting coming up on November 30. In recent weeks, the expectations have been declining on whether a strong enough agreement would be reached, but today's comments from Saudi Energy Minister did help lift crude oil prices away from 3 months lows. The US crude is currently trading just above $44 a barrel. If we look at the economic calendar for today, we can see we had some GDP data out of Germany. That was the second estimate. We saw GDP being revised down from 0.4% to 0.2%. That was weaker than expectations of a downward revision to just 0.3%. And that's mainly due to weaker than expected industrial output and exports for Germany. Shortly, we're going to have UK inflation data. That's going to be watched closely, because we're seeing some impact of the weaker sterling feeding through higher import prices in the UK. So it's going to be interesting to see whether headline inflation rises again. Last month's headline inflation rose to 1%. They're expected to edge higher once again to 1.1%. And later in the day, we're going to have the ZEW economic sentiment out of Germany. That's expected to show continued improvement in economic sentiment in the Eurozone's largest economy since that dip back in summer from Brexit. Later on, we're going to have second estimates for the Eurozone GDP. That's expected to be confirmed at 0.3%. And in the US, later on, we're going to have retail sales. That's going to be important, because retail sales are closely watched, because consumer spending is a large component of US GDP and also the main driver of growth. So it's going to be important in the Fed's decision making for its December policy meeting. That's it from me. Thank you very much for watching, and have a great day.